So earlier on, before we went to the commercial break, we told you we're going to learn how those pesky student loans won't affect you under this current mortgage plan, and that's with Matthew Bates with Movement Mortgage. So Matt, what is this program that is out to help buyers with the student loan burden?
With this month, for this month's segment, I'm really excited because this is an exciting time in my business where Fannie Mae. Fannie Mae is it's a private mortgage company that has their guidelines that conform to a certain rule book. Mm-hmm. Let's just call it a rule book, if you will. And there's Fannie Mae and there's Freddie Mac. Those are the two big private mortgage companies that we lend to.
Movement Mortgage and other mortgage brokers, you take the loans, you package them up, and you go ahead and sell them to the secondary market under their set provisions.
Yep. So we say if I write 100 Fannie Mae loans this year, mm-hmm. they take all the similar ones with same FICO scores, same down payment, same loan LTV, which is loan to value. Okay. And same debt to income ratios, and they kind of package them all up. The reason why that happens is because they don't want to pay, the loan officers and the overhead and the brick and mortar place to write all these loans. So they'll have us do it. We do it, and then we own them, and then we sell them so that they don't have to pay the loan officers. They just take an already done loan, and it follows the rule book set by Fannie Mae. Mm-hmm. Fannie Mae doesn't buy these loans. They just develop the rule book that we write the loans that it conforms to. Okay. And we sell them to these investors, and they'll buy them based off of because we followed this rule book.
Off the guidelines. Okay.
So they say they won't buy the loan unless it conforms to Fannie Mae or Freddie Mac.
Very well explained. So now what is Fannie Mae doing to help our student borrowers? These are people with the burden of student loan debt where they couldn't qualify in the past.
So Fannie Mae just came out, and I have the update that I have right now. It's a selling guide announcement that my company gave me. It happened on July 25th.
It's very recent
this year, so it's just really, really recent, and it's good that we had this radio show so close to it because I had an opportunity to boast about it, and it's right off the press. So as far as student loan clarifications, Fannie Mae has relaxed on a number of guidelines which we can get into, but one of the major ones is student loans. They made an announcement that we simplified our policy and changed how to handle student loan payments on credit report missing with a missing or zero payment amount. Mm-hmm. So a lot of times with students that had just graduated college, when they come out, their student loans haven't been activated yet. Because you have a 6 month grace period. Mm-hmm. So the credit report shows a zero balance because they haven't been making payments yet. Sometimes, depending on the field of work that the student is going to be moving into, the government gives some sort of the student loan company, the bank that gave the money for the student loans, mm-hmm. gives specialized repayment plans based off of the job that they're doing. Like I know, for instance, teachers, nurses, it's an incentive to put students and people into these certain workforce and these certain jobs mm-hmm. because they're needed. There's a lot of need. So if you're going to go do that, you might not get paid as much as if you went in a different avenue, but we're going to help you with your student loans. So a lot of that takes time. It doesn't happen overnight. Mm-hmm. But deciding whether or not it's right time to buy the house happens a lot quicker than student loan repayment plans gets finalized. So when the lender goes to pre-approve somebody and pulls their credit and they're a recent student and their student loans haven't kicked in or their actual repayment plan hasn't kicked in, most of the time it shows up as either a no payment where there's a dash on the trade line mm-hmm. or there's $0. If that's the case, we have to prepare the customer for eventually having to have a student loan payment. And we don't want to make sure that they get some $2,000 mortgage mm-hmm. because they have zero money going to student loans, and then 6 months, 2 months, 2 years down the road, they all of a sudden have $300 or $400 a month that they have to pay in student loans. Okay. Now it's going to make them difficult to budget because they're not making enough money. So we place that payment in there, mm-hmm. and typically before this announcement came out is 1%. So before with the 1% we'd have to put in, that was before the guideline. Now they changed. Now they say if that is zero on the credit report, okay, and you can show that you're in a repayment plan, or you already have a fixed payment that just hasn't applied to your credit report yet, we'll use that instead of our 1%, which we used to fall back on. Now that 1%, if you have $60,000 in student loans, yep. I mean, you do the math, that's a big monthly payment.
It's huge.
Huge. And some people have hundreds of thousands of dollars in student loans, depending if they're doctors, they're nurses, and if they're going out of state or whatever. Students have different things going on. Some people do $50,000 a year So now they're coming in at 1%. If you do, $60,000 times
$600. So
$600, but you do that by 4 years. Some people are paying like $2,000 a month, and if they have to follow Fannie Mae's old guideline, which says I had to put a 1% in there.
But the payments
now,
are lower
because they're going. You have a lot of people that are in the medical field. You have a lot of teachers that are in there.
Yep.
Where they're not going to make six figures right off the bat. So the student loan company puts them into a repayment schedule where they have $0 for a certain amount of time.
Yep.
Until they make a certain enough money, and then at that time they can afford the payment and their mortgage.
Totally catching it now.
So now Fannie Mae has said that no, as long as you can show that you're in that repayment plan, we'll take that zero payment. Now they qualify.